Still Business Lens on Rapid TV. And yes, I did tell you that I was going to be having a conversation with somebody from Norrenberger. I'm talking about Mr. Samuel Oyekome's lead research and insight associate from Norrenberger Financial Group. They put out a really interesting report talking about, well, projections for the second half of 2025 and sort of a look back at what happened in the first half of the year as well, and then what to expect. So we're going to be talking about all of that with him today. It's a very interesting report, and it's good to have you here. Welcome.
Thank you very much for having me.
Okay, so one of the things that I have noticed with a lot of experts, you know, is that 2025 seems to be that year that they're projecting. I mean, we're attaining some sort of stability. And so, you know, especially for the second half, they're like, oh, we're probably going to have this. But you put out an extensive report. So let's start with, first, let's look back over what happened in the first half, you know, of 2025, where things seem to be stabilizing. And then we'll talk about your projections. I mean, even though the second half has started already, you know, but let's talk about, you know, what happened then, because I'm sure you guys also looked at all of that before you put this report together.
Yeah, so the first half of the year was quite interesting, just like you said, and in line with many other research houses too. They've seen 2025, or we also see 2025 as a year of recalibration. In fact, that's the name of the report, right? We said from shock to calm. And that's because before now, we're going through quite a number of shaky things: high inflation, instability in terms of FX, high cost of everything as a result of some of the policies that the new administration brought to be, right? Things around removal of subsidy, and that saw crude petrol prices rise significantly, the imbalance in terms of exchange rate. But so far in 2025, we seem to be attaining some form of stability from those shocks. Last year, our PMI numbers were below 50, which indicates some level of contraction, in fact, significant contractions. So far this year, it has improved, currently around 52 regions. Crude oil production has also improved to a large extent. We've also seen some greens, like there was a dashboard that showed some directions in terms of greens, red, and some are black. And we see a lot of more greens compared to red, as we would have seen last year. So we are at the point where things looks to be shaping up, not just from the macro side, but also in the investment side of things. Both fixed income equities market have also seen some very positive performance so far. So I think it's quite a good development to say.
I mean, one of the things that you talked about is macroeconomic indices seem to be shaping up. There's stability. You know, I think that is also one of the things that the DG for WTO also mentioned, talking about, you know, being able to stabilize the economy in this period. And he also mentioned the equities market. In fact, there are reports which talk about the fact that the equities market has probably not done as well for any other presidents, you know, like this president in recent times. I mean, you can argue that, I mean, it's up to you to give me numbers, whether you agree or not. But I think where there starts to be a disconnect, you know, is like you see macro indices, you see Wall Street or the equities markets, but then you look at Main Street and then there is a dichotomy because it's not reflecting just yet. When do you think that reflection will start? I mean, we're going to talk about projections, but let's talk about when we will start to see that translates or trickle down, you know, to you know, the main economy.
So interesting, right? Oftentimes, there's always that discrepancy between what happens in the macro side and what happens to the average Nigerians. I'm really, at the end of the day, it's the bottom line. You want to be able to say, oh, GDP is growing, then how is that impacting me? But I think we are seeing it is just not quite significant. So when we say inflation is moderating, it doesn't mean that prices are declining. It just means that the rate of increase is slowing down. And what we would have seen is that as a result of the stability we've seen in exchange rate, don't forget that at some point it was around 400, then 900, went as high as 1,007. Now it has
1,009.
1,009, yeah. And now we are seeing it stable around the region of 1,550, 1,006. So that level of volatility has really reduced to barest minimal, which has helped businesses to be able to make projections, for example, budgeting in terms of business activities. Prices are also not as volatile as we used to have them, except for food items, right, which has seasonality effect on them. So you can't really buy into that much. So we're already seeing that, and businesses are also quite optimistic around the fact that some of these macros are beginning to impact their bottom line. Of course, for the average Nigerian, we still spend a huge chunk of our money on food, transportation.
So will you say that part of the reason why we have this sort of, issues, discrepancies, also because maybe we operate a largely informal market, so you have a lot of people in the informal sector, so a lot of times before you start to have the trickle-down effect, it's going to take quite a bit of time.
Yeah, that's quite part of the fact too. When you look at the last MBS report, they kind of had a way of dividing into formal and informal. And you see, for some interesting industries, right, you find that a huge part of that is quite informal. And that's why you tend to see that some of these policies don't get to trickle down to the average Nigerian on the street and then to other areas of the economy. And I quite agree with that.
Okay, well, let's talk about the fact that if you also look at inflation, if you say inflation is moderating, there might be the argument of, is it just because we rebased, or is it really starting to get to that point? Because if we think that inflation is slowing down, or whatever term you want to use, when that reflects in what happens with the MPC, then there's still not a lot of confidence in that. So they're still holding the MPR, and you still see that, so this month we have it go up, and then next month we have it come down a little, and it's not really affecting the average person.
Yeah, very true. Inflation used to be around over 34% last year, and then we saw that technical decline as a result of the rebasing to about 24%. But what we've seen in the last 4 months is that the headline inflation year on year had been slowing. Right now, it's around the region of 21%.
But food inflation is still...
Yeah, there's still high food inflation. Of course, seasonality impact on that. But what the MPC is also going to be looking at is also the month-on-month inflation, which has been rising. And what that tells them is that there are still immediate risk, despite the fact that year on year it's slowing. But right now, there are still things around US tariff, global tension, insecurity in food-producing regions. All those things impact short-term interest inflation rates. And that's why you find the MPCs being quite cautious in terms of probably changing interest rate direction.
But you also talked about our oil production going up. That's a good thing. So that would also have some sort of moderating effect on the economy in general.
That has helped to balance the fact that crude oil prices had also gone down below what our benchmark for the budget is. But of course, the fact that we're improving production, that has been able to average that out, and that's good for the economy. So
let's talk about your projections, for H2. But what we're seeing for the second half is you're very optimistic about it. In fact, I'm looking at what you're looking at for, GDP, and you're looking at 4.05%. Let's talk about that.
Yeah,
because that is very. I want to know how you got to that.
Yeah, interesting. And I'm sure for some audience, Nigerians would have also seen Minister of Finance mention the fact that they are projecting 5% growth.
I saw that. I'm like, okay, well.
So maybe they're also seeing some of the things we are seeing, or we are seeing what they are seeing. Either way, we'll find out by the end of the year. But of course, Q1 2025 we grew by 3.13%. There's a rebasing exercise that has seen our nominal GDP rise above 365 trillion naira, and that's, of course, that's good. But what we've also seen is that there are interesting industries that are springing up, which are not necessarily large sectors of the economy, but they have been growing astronomically. One of them will be rail transportation, another is entertainment. There's been a lot of things happening around the region. The financial sector has also seen quite positive movement across this year so far. Recapitalization exercise in the banking sector, the insurance sector, the signing of the bill last 2 weeks by the president. Yes. And then we've also seen there's also a recapitalization coming up even in the insurance sector. So a lot of things is happening at the same time. Telecommunications sector contributes about 9 to 10% to the economy. And of course, the NCC gave them the go-ahead to
And you saw trade also surge.
You said?
The trade, when you look at the GDP figures, trade also surged.
Oh, exactly. So by the time you start putting all these things together, you see that the economy is really primed to grow significantly compared to where we're coming from. PMI figures for Q2 average around 52.3 points. Q1 it was around 51. That growth alone tells you that we are leaping from 3.05% and we're moving somewhere towards the 4%.
So are you saying that your 4% projection is very, very conservative? Because you're saying the government projecting over 5%.
That's a base. It's base, right? And we are quite optimistic, but it's a base projection.
Very interesting. So does this have, just to clarify, does this projection have anything to do with the fact that we had this rebasing thing for the GDP? Or, it would have grown that way regardless?
two ways.
Okay.
So two responses to that. One is that we're already seen the effect of the rebasing, right? What the MBS did this time, which they didn't do when they released inflation rebasing figures, was that they tracked it back to about 2019 to see what the growth would have been even with the rebasing figure.
Okay.
So right now, the 3.15% or 3.13% we saw is a rebased figure. But what that has also brought to bear was that we are now seeing in sectors that have grown significantly in the last few years that are also significant growth drivers come into limelight. And I think that is the area where the rebase is going to have significant impact on growth going forward.
Okay, so let's talk about this $1 trillion projection. You know, the government is targeting that, hoping that we get it by 2030. But one of the things that you are talking about is that GDP needs to grow by at least 22% annually if we're going to get there. That's a tall order.
Yeah, very tall
22%.
Tall one. Well, that's nominal GDP, right? In fact, when we did our analysis, right, we saw that the economy really needs to grow at 28% annually, nominal GDP. Right now, we're growing at a region of 16 to 17%. But we were able to track that down, that based on some of the other policies happening in the FX environment, if we could see Naira again to about 1,002 to $1, then the economy needs to grow annually, nominal GDP now by 22%. The combination of that can help us reach $1 trillion by 2030. But the truth is that that's a very huge one.
Exactly.
But if we're going to score some of the policies or reforms that we've been seeing so far, those, we could say those are steps in the right direction that could help us catapult to that kind of growth. How we will get there, it's a question that we really need to see because it also involves political will and a number of other variables. But again, it's a tall order.
Because I was going to ask you, especially when you look at the expectation of the currency to 1,200, how do we get from where we are right now to that particular point? Yes, we're ramping up our production. What else do we need to do? Those particular headline that I talked about today, looking at where we spend over $10 billion to bring in food imports, but we earn less than $400 million from the agricultural sector. So we're still mainly driven by oil. And the prices of oil, well, crude oil, something that we cannot control, right? It is beyond us, and it's very volatile at this point, especially because of all this, whether it's tariff, Middle Eastern, Ukraine, Russia. So there's a lot going on in that space. So how much oil do we have to produce to get us to that point where we have a robust FX earning, where it now starts to also affect what we have for the cost of our currency?
Well, interesting question, right? And if I'm going to analyze the FX market, I'll try to break it down into where do those FX come from. So one of them is diaspora remittances. Another is trade, commodity trade, which heavily relies on crude, as you said. Another would be in terms of transactions that we have with other international countries. In terms of diaspora, well, I don't think there's anything more to say about that, especially the fact that likes of US, which houses the largest Nigerian migrants, right, already placed about 5% tax on inflows coming from the US. Then you look at trade again, largely crude. We don't have power over international crude oil prices, but what we have power over is production, and I think that has been relatively good in recent time. What I think that the government could do, or generally we could do, is first, find a way to be able to leverage on other areas by which you could make generate effects. One of the things is the African free continental trade. It had been for some years now. We have not really taken advantage, because anytime I look at the trade figures and I see what we do with other African economies, they are still largely small, right? We just some months ago, the U.S. placed 15% tariffs on Nigerian imports or exports to the U.S. And a number of people were just, well, a lot of voice and eyebrows over there. And the truth is that we have the opportunity in other markets. We need to try and take advantage of those things. The Nigerian economy also needs to be presented in such a way that these inflows can come at will.
Yeah.
What we have right now in terms of our capital importation is that a lot of those come in portfolio investments. And don't forget, these are like loans, right?
They're hot money.
Yeah, we need them to come in direct investments. So what do you need to do to ensure that FDI come in? One, you need to tackle insecurity. If foreign investors do not see Nigerian economy as a viable place to come do business, they won't bring the money. Ease of doing business also in the economy, we need to also bring that. To the table. If you address the combination of these two, And then foreign investors can also see that there is the political will to do what is right to ensure that businesses grow. Of course, earlier this year, we saw some upgrade in terms of our credit ratings. That's good for us. But we need to do a lot more to ensure that foreign investors start taking advantage of that. And I think that then we can see those monies coming at will and stay, driving economic growth and also ensuring FX
Because
stability.
FPIs don't develop your economy.
They come
They
and
don't,
go.
they don't do that.
They come and go at any time.
They're just going to go. So let's talk about equities markets, your projections for that.
Yeah, equities market has been rather bullish so far this year. A lot of those happening around the second half of the year, second quarter of the year. Of course, right now we are seeing some profit taking, which you also mentioned in our report that there's going to be some pockets of profit taking in the second half of the year, but we are still positive. The market is doing around the region of 30 to 35% year to date, and that's quite good. In the last 5 years, the market has been doing out positive returns, and I think that speaks to some level of improvement that we've seen in the equities market. And then going forward, we think that's going to continue. But of course, if you are going to invest in the equities market, you need to be informed to know when to go in, depending on the kind of investor that you are, short, long. Just understand those dynamics, and then you'll be fine.
A lot of Nigerians are not very educated when you're talking about going into the markets. I mean, a lot of retail investment is still not at the level it's supposed to be in Nigeria. So how do you get there?
Yeah, of course, education, and which is why a lot of research outlets and financial institutions are also every now and then coming out with reports to educate people. What we saw in the last few months is the fear of missing out. A number of Nigerians hearing that the equities market has been doing quite well, and they just want to rush in. And unfortunately, when you rush in, the chances are you're going to rush out. I was speaking at one event some weeks back, and I was having a conversation around the equities market, and someone there raised up and said he had bought First Bank or whatever stock some 20 years ago, and he's still in losses and all that. And in my mind, I'm like, well, you really need to be informed before you go into the market, know when to go in and know where to go out. And I think we're doing a lot going forward. At Norrenberger, I'd say for a fact that we're trying as much as possible.
You guys have an ASI model that's going to help people
Yeah,
with this?
we have an equity portfolio model.
Okay.
The model last year outperformed the market. It did about 50% market, did about 40%. This year, we are almost doubling the market. So
That's interesting.
As of Friday, we're already doing around 70% year to date. And yeah.
We can check that out. Let's leave it at that. Okay, then thank you so much. Samuel Yakovic, he is from Norrenberger Financial Group and is a lead research and insight associate. Thank you so much for helping us break down these figures. Of course, maybe at the end of the year, we'll bring you back to see if your projections.
Come check that.
Yes, let's tick it. All right, then. Thank you so much. This has been the Business Lens for today on Rapid TV. On the other side of the hour, we have the Rapid TV news coming up, and we'll do this again, of course, on Thursday. My name is Faith Joseph. Have a good day.